Hi everyone, welcome to this webinar on the future of lease accounting, automation, AI, and smarter decisions. Although Sam already introduced me, I will say a few words about myself. So I work as a senior value engineer specializing in lease accounting. I collaborate closely with organizations to really understand their processes, deliver tailored demos, and show how the right tools can simplify lease accounting and support better decision making. Because I come from an accounting background myself, I really understand the day-to-day challenges that teams face, whether it's chasing down data, navigating standards, or working around limitations in existing systems. My focus is on making the technical feel practical and really helping teams move from meeting compliance to actually gaining value from it. So I'll actually start with a personal story before we dive in, one that really shaped my perspective and why I care so much about this topic. I started my career in audit, as Sam already stated, at a public firm at PwC, where I had the chance to review all areas of financial reporting, including leases. And over time, I really began to notice the same issues popping up again and again, especially when it came to lease data. It often sat outside of core systems, scattered across teams, and year-end audits became super stressful. That experience really stuck with me. It was clear that the challenge wasn't the people, it was the lack of connected processes and tools. So I made the move to finance transformation, which was both challenging and rewarding. This focuses on helping teams modernize and streamline lease workflows. Now, I work with companies to build more integrated systems, drive efficiency and visibility, and ultimately help turn what used to be a compliance burden into something that adds strategic value. When I was working in audit, I remember one client that made an impression. They were a large retailer with hundreds of leased properties, but no centralized lease system. Every location had its own spreadsheet, some maintained by finance, others by operation, and no two were formatted the same. I spent hours trying to reconcile these lease schedules, tracking down missing clauses, confirming assumptions for their disclosures, and I remember thinking, this isn't what accounting is supposed to be. It's not that the team lacked expertise, they were smart, diligent professionals, but they just didn't have the tools to work smarter. That experience stuck with me, and it was clear how much time and energy was being wasted manually gathering and validating data, when that effort could have gone into strategic analysis or audit readiness. That's when I realized we can't fix problems with people power alone. We need the right systems to free people up for higher value work. That's why I do what I do today. I've seen firsthand how the absence of technology can really weigh a team down. And now I get to be on the other side, helping organizations build stronger, smarter, more automated foundations that unlock value from day one. Before we get into the content, here's what we'll be focusing on today. So first, we'll walk through some of the most common challenges in traditional lease management and lease accounting, things like data silos, manual processes, and the pain points that tend to surface during audits. Then we'll look at how a centralized lease system can really solve these issues, and with benefits like real-time collaboration, improved accuracy, and better overall efficiency. We'll also explore how automation and AI are starting to change the game, from extracting data and flagging errors to supporting, forecasting, and other time-saving workflows. And throughout, we'll also touch on how these innovations are helping finance teams work more proactively, not just to stay compliant, but to gain more control and insight into their lease portfolios. So I'll do a little bit of context setting. I'll be using the terms lease management and lease accounting throughout this webinar. So let's just quickly define those two key concepts. So lease management involves overseeing a company's lease portfolio. This includes managing lease contracts, monitoring key dates like renewals and expirations, ensuring compliance with lease teams, and handling operational aspects of lease assets such as property and equipment. Lease accounting focuses on how the leases are recorded and reported into the financial statements. It ensures compliance with major accounting standards, including IFRS 16 and ASC 842. This process involves measuring lease liabilities and right of use assets, recognizing expenses over time, and preparing disclosures that transparently reflect the company's lease obligations. Together, lease management and lease accounting provide both operational control and financial transparency for an organization's leases. Let's start with the reality that many teams are facing today. Manual work is overwhelming. Entering data, fixing errors, and juggling spreadsheets steals time from strategic tasks. Data is scattered everywhere. Finance, legal, real estate all have their own versions. And when year-end audit comes around, the pressure truly spikes. Without a clear centralized systems, teams are scrambling to pull documents together. These challenges aren't just annoying, but they hold teams back. That's why we need smarter, faster solutions. So first, let's talk about the manual work and the risks that come with it. This is the root of many day-to-day frustrations that finance and leasing teams are facing. Let's start with data entry errors. We've all seen how something as small as a typo, a single wrong digit in a lease start or end date, can simply throw off an amortization schedule. And the impact isn't isolated. That one error can flow through to journal entries, reports, and even disclosures, creating a chain reaction of rework. Then there are missed deadlines. Without automated alerts, it's easy for key dates to slip through the cracks. Renewals, terminations, CPI reviews, and the cost of missing those isn't just operational, it's strategic. You lose the chance to renegotiate, you get locked into unfavorable terms, and sometimes you don't even know it's happened until it's too late. Next, we have repetitive work. We still see teams spending hours copy pasting rent schedules from PDFs into Excel, month after month, just trying to keep up. And every time someone touches a spreadsheet, there's a risk of breaking a formula or misaligning a reference. It's not just inefficient, but it's also fragile. And all of this leads to a bigger issue: low confidence in the data. When errors appear regularly and processes feel manual and unclear, teams really stop trusting the numbers. Instead of focusing on analysis and strategic planning, they're stuck double checking inputs, retracing steps, and hoping that everything ties out. And the thing is, these risks compound. Even in a relatively small portfolio, say 100 leases, a 1% error rate means that at least one significant mistake is present. That could mean a missed payment, a misstated expense, or a compliance issue that is flagged during the audit. It's not just a technical problem, it's a trust problem. And when trust in your data erodes, so does your ability to make fast, confident decisions. Now let's move on to one of the most common challenges we see across organizations: data fragmentation and silos. In many cases, there simply isn't a single source of truth when it comes to lease data. Instead, accounting, real estate, procurement, and legal teams all maintain their own versions of truth, working from different systems, files, or formats, which creates confusion, misalignment, and most importantly, risk. From the accounting side, lease schedules, payment information, and journal entries are often maintained in massive Excel spreadsheets, built on templates that have been handed down over the years. These files are often owned by one or two people, and if they leave or make a mistake, it becomes really difficult to trace. And let's be honest, those templates aren't always version controlled, and formulas can easily break. So during month end or year end, accountants spend hours reconciling data from different tabs or different files, even different teams, just trying to get the numbers to tie. On the real estate side, things don't look much better. Lease agreements are typically stored as static PDFs or scanned documents in shared drives. Key terms like CPI clauses, free rent periods, or termination options may be tracked in disconnected spreadsheets, or worse, buried in emails. There's often no direct link between what's negotiated by real estate and what's recorded in accounting. So, what happens as a result? Well, first, critical updates fall through the cracks. If a lease amendment is signed or not communicated properly, or if it is communicated but not tracked in the accounting system, your financials become instantly outdated. That's how you end up missing renewal windows, incorrectly applying rent escalations, or misclassifying lease modifications. Second, the lack of integration leads to reporting challenges. Without consistent centralized data, teams can't confidently report on lease liabilities, rent expenses, or upcoming obligations. There's no easy way to drill down from a journal entry back to the clause that supports it. And from an audit standpoint, the lack of a clear audit trail makes compliance more difficult and time consuming. Then there's the workflow challenge. In many organizations, there's no unified system for managing approvals, amendments, or terminations. You might have accounting waiting on real estate waiting on legal, and no one's really sure who's supposed to sign off. This slows down everything and pushes teams into reactive mode. And finally, we have version control, or should I say the lack of it. This creates chaos. When multiple teams are updating different files, it's hard to know what's accurate. Two people might be working off different versions of the same lease, and that disconnect could lead to a real financial impact. At the end of the day, data fragmentation doesn't just cause operational headaches, it directly impacts your ability to plan, to report accurately, and to stay compliant. And when you don't have confidence in your data, it's almost impossible to act strategically. Let me walk you through what a typical audit week looks like for many teams who are still managing their leases manually. It's 5 days of chaos for the purpose of this example, and it happens every year. Day one starts with panic. The auditors want backup for lease liabilities, but you're digging through inboxes, asking legal for PDFs, searching SharePoint, or worse, calling landlords for signed copies. You're already behind. Day two is where finance rolls up their sleeves. You try to rebuild amortization schedules, but the original Excel files are incomplete or formulas are broken. You might find discrepancies between the lease and what's in your GL. And now you're manually adjusting timelines and amounts under pressure. By day three, the cracks widen. Legal has one version of a lease amendment, but your records show another. The auditors flag timing differences, and you start to realize that your system doesn't track historical changes. Now you're playing detective, trying to reconstruct events from 18 months ago. Day four is a barrage of follow-up questions. You're asked to explain inconsistencies in straight line rent or justify why the right of use asset dropped last quarter. You're pulling data from emails, Excel, and memory, and every answer raises a new question. By day five, you're exhausted. The numbers are submitted, but you're really crossing your fingers at this point that nothing critical was missed. It's stressful, it's reactive, and it strains your credibility with auditors. And worst of all, it was avoidable. This is what audit fire drills look like when lease data is scattered. Without centralized records and automation, you spend more time chasing documents than delivering insight. So, with the end of that challenges section, let's go ahead with our first polling question.
Thank you, Sabrina. All right, it's time for our first polling question. Please take a moment to submit your answer. You will have 1 minute to respond. Thank you.
Interesting seeing the answers that are coming in. Seems like the biggest struggle is manual processes and disconnected systems, which makes a lot of sense. See just a few more seconds. All right, the poll is done. Yeah, so actually, the one with the least amount of votes was lack of visibility or reporting, which is interesting. So with that, I will jump into the future state with centralized platforms. So what we've covered are the common growing pains of lease management and lease accounting, such as disconnected data, manual processes, and missed opportunities to use leases as a strategic lever. But this is where the conversation really shifts from reacting to reimagining. Finance transformation isn't just about faster close cycles or cleaner audits. It's about creating a connected environment where lease data informs decision making across departments, where compliance, control, and strategy can really coexist. In the next few slides, we'll talk about what a future state looks like, a structure where information flows freely, teams collaborate on a shared foundation, and technology enables finance to move from operational burden to strategic leadership. So let's talk about what a centralized lease platform is. It's a single unified system that brings all lease-related data and processes together in one place. So instead of juggling multiple spreadsheets or systems, you store all your leases centrally. This creates a consistent source of truth that everyone can rely on. The platform links accounting and finance seamlessly, automating journal entries to reduce manual work and errors, and also sends automated alerts for critical lease dates like renewals and expirations, so nothing slips through the cracks. Audit trails are built in, tracking every change and approval to really support compliance and simplify those audits. Because everything is connected and updated in real time, you get accurate reports on demand, empowering better decision making. In short, a centralized lease system platform streamlines your operations, cuts risks, really saves you a lot of time and effort. So let's talk about what it looks like when you're moving towards that single source of truth with a centralized lease system. In many organizations, as we've already seen, lease data lives in silos between different departments, which can cause a lot of unnecessary back and forth to get simple answers. A centralized lease system changes that entirely. By storing all the lease data in one place across departments, you create a shared foundation. Everyone works from that same source of truth. That means less confusion, fewer versions of the same file that are floating around, and much easier time aligning decisions. Whether you're preparing journal entries, reviewing terms for a renewal, or renegotiating an amendment, everyone is really looking at the exact same information. So, one of the biggest advantages here is real-time visibility. When someone updates a lease, maybe a new amendment is signed, a CPI adjustment is applied, or a termination date is confirmed, that change is instantly reflected across the platform. There's no need to email new versions or hope someone remembers to update their spreadsheet. It's live and immediate, which dramatically reduces that risk of working from outdated data. It also means you have a unified document repository. So no more SharePoint, a single place to store all your contracts, amendments, communications, and supporting documents. No more digging through old folders, searching old emails, or trying to figure out which version is the final one. This really simplifies audits, improves traceability, and really eliminates that version control issue that you'd have. Having centralized lease data fosters stronger cross-functional collaboration. When finance, legal, and real estate can all access the same platform, conversations become much more productive. There's a shared language, a shared context, and most importantly, a shared responsibility. That naturally leads to greater accountability because roles and workflows are more clearly defined within the system. Centralization also enables standardization. So you can define consistent data formats, naming conventions, and workflows across the portfolio. This reduces discrepancies, supports cleaner reporting, and makes it easier to integrate with downstream systems like your ERP or FP&A tools. Role-based permissions are another important piece. Not everyone needs to see everything, and that's okay. With the right access controls in place, legal can focus on terms and clauses, finance can focus on amortization and journal entries, real estate can focus on occupancy metrics and renewal timelines. Each team gets the information that they need without the unnecessary exposure or clutter. And perhaps most importantly, this approach helps eliminate duplicate entries and manual reconciliations. So you're no longer spending valuable time cross-checking numbers between Excel files or correcting copy-paste errors. Instead, you're accelerating the close process, reducing risk, and freeing up capacity to focus on analysis rather than on cleanup. In short, a centralized system isn't just a better way to manage data. It's a foundation for better collaboration, faster reporting, and more strategic decision making. Now let's talk about operational efficiency. Because one of the biggest in lease management and accounting today is reducing the amount of manual and repetitive work. This consumes your team's time and their energy. Traditionally, lease accounting has involved a lot of hands-on effort. Payments are tracked manually, journal entries are posted one by one, adjustments are recalculated every time something changes, and each of these creates room for error, as we've seen in the previous section. With automation, though, the entire process starts to look very different. For example, lease payments and journal entries can post automatically based on predefined schedules or terms. Once your leases are set up in the system, the software takes care of the rest, handling monthly postings, accruals, and reclassifications in the background. This alone eliminates dozens of manual touch points every month. Straight line rent and CPI adjustments. So these are used to require to calculate changes in Excel and manually update the GL, and they can be configured in advance now. So if you know that a CPI increase is applied every January based on a specific index, the system can apply that logic automatically. No one needs to dig into PDFs, pull inflation rates, or worry about missing a step. Another area where automation adds tremendous value is deadline management. So those lease renewals, terminations, and option windows that fall through the cracks because no one was alerted on time, you have built-in email notifications, and the system would ensure that your team is proactively reminded when key dates are approaching, giving you the time to assess and negotiate terms before it's too late. You can get these by email, text, there's many different ways as of today. And when you're managing a large lease portfolio, the ability to work in bulk is also something that's critical. Whether you're uploading a batch of new leases or making edits across a group of properties or migrating data during an acquisition, bulk tools make these changes quick and scalable. What used to take days can now actually take minutes. Integration with accounts payable is another huge step forward in operational efficiency. Instead of maintaining two systems, one for accounting and one for payments, you can actually connect them. So approved lease payments would throw directly to accounts payable, which would avoid double entry, reduce the chance of errors, and ensure that what you've accounted for is actually being paid for on time. Setting up new leases also becomes much faster with templates. So you can predefine standard lease structures based on property types, regions, or business units. So instead of building every lease from scratch, you start with a foundation that already includes your preferred terms, fields, and configurations. That's not the only thing that speeds things up. It also improves your consistency across the portfolio. So when you pull all of this together, the benefits are clear. You have less time spent on data entry and corrections, faster and more accurate month-end close, more bandwidth for strategic work like forecasting and business reporting. So ultimately, automation isn't about replacing people. It's about freeing up your people to focus on the work that matters the most. And in today's fast-moving business environment, that's exactly where you want your team to be, with the tools and time to make a real impact in lease management and lease accounting. So let's move on to continuous audit preparedness. So, as we saw, this is critical, but often an overlooked benefit of a centralized lease accounting system. Oops. So, we've seen in our previous example that audit prep can really be a scramble. It's stressful, time consuming, and prone to error. But with a centralized system, it will actually be a lot easier. So all lease related documents, original contracts, amendments, approvals, and correspondence are stored securely in one place. No more scattered PDFs, network drives, or unsearchable email threads. Everything lives in a system with access tracking. So you always have audit logs of what people are doing. And it goes even further. The system captures a full version history for every record. If a lease was modified, you can see exactly what changed, who made the change, and when the change happened, with full timestamps and user IDs. This eliminates that confusion over which version is final, or who approved what, or whether any steps were skipped. These automated logs are crucial not just for internal controls, but for building trust with your auditors. When they ask for documentation or they need to trace a specific accounting entry back to the lease clause that supports it, you're fully prepared. You can walk them through the entire history with confidence without needing to piece things together manually. The system also offers built-in compliance reports, which update in real time as your data changes. Whether it's amortization schedules, lease maturity analysis, right of use asset roll forwards, or IFRS 16, ASC 842 disclosures, these reports are ready to go at the touch of your fingers. There's really no need to build them manually from spreadsheets every time your portfolio changes, which takes a lot of time. And because your calculations are automated, your schedules are more accurate, consistent, and audit ready from day one. You're not just pulling numbers, you're providing a full defensible story behind those numbers with source documents and logic already in place. The end result? Faster responses to audit queries, less back and forth with auditors, fewer late nights assembling backup, and most importantly, more confidence across your team that nothing will fall through the cracks. By staying continuously audit ready, you shift from reactive to proactive. You spend less time assembling data and more time focusing on strategy, analysis, and supporting the business. Audits don't have to be a fire drill. With the right system in place, they can become a smooth, predictable part of the year. Let's talk about actionable lease intelligence. So, lease intelligence gives you clear visibility into your portfolio. You can compare costs by location or business unit and track lease renewals and accounting deadlines before they sneak up. It helps you spot savings and catch underused or risky assets early. Dashboards also bring trends and anomalies into focus, while scenario modeling guides smarter financial and operational decisions. This shifts finance from a back office role to a more strategic partner that is driving both lease management and accounting outcomes. But this is just the start. Companies want more, faster insights with smarter predictions and tools that help them act before challenges arise. So, in the next section, we will dive into how technologies like AI are reshaping lease management and lease accounting, turning data into foresight. But before we do that, we'll move on to our second polling question, which relates to the previous section on centralized platforms. I'm just curious to know if anyone has used them before, if it's a priority for you.
Thank you, Sabrina. All right, it's time for our second polling question. Please take a moment to submit your answer. You will have 1 minute to respond. Thank you.
Nice to see these answers coming in, and most people seem to be already using one, which is great because the next section really talks about where we're going with all of this and what the future looks like. So if you're getting into that space now, you're already ahead of the game.
We are closing the poll in 5 seconds. Please submit your responses. Thank you, everyone, for your responses.
Thanks, Sam. All right, so without further ado, I will jump into the next section, which talks about innovation in technology. So, up to this point, we've seen how a centralized lease platform can really transform that lease data by bringing it together, ensuring audit readiness, and automating routine work. Now let's move into the world of innovation. Technology is not only speeding up manual tasks, but also adding layers of intelligence that can surface insights we never had before. In this section, we'll explore three key areas where automation and advanced analytics are reshaping how we manage leases, forecast obligations, and operate on a global scale. Let's begin with how automation and artificial intelligence are already at work in leading lease systems. So, how is it being used today in lease accounting systems to enhance productivity, compliance, and decision making? First, AI is commonly used to abstract lease data. Instead of manually copying terms from PDFs into a system, AI extracts fields like base rent, lease term, renewal options, and clauses. This saves significant time and reduces data entry errors. But it goes beyond data capture. AI can also validate extracted data by comparing it directly to the contract text. If the system flags a mismatch between the abstracted value and the language, users are alerted immediately. This adds a layer of accuracy and control. Some platforms also offer recommendations for accounting treatment. For example, if the lease includes a purchase option or variable payments, the AI can suggest whether it should be classified as a finance or operating lease based on the criteria indicated in ASC 842 and IFRS 16. AI can also support disclosure reporting. By analyzing how your company or similar organizations have disclosed leases in the past, it can recommend formatting and note structure, ensuring consistency across reporting periods. Another emerging area is compliance assistance. AI can deliver prompts that remind users to complete key steps, such as lease reassessments or impairment evaluations. These reminders are context sensitive, so they show up only when needed, helping teams stay on track when without information overload. On the reporting side, AI can help generate custom dashboards based on user behavior or common workflows. It recommends metrics like right of use asset changes or lease liability roll forwards, lease cost by region. This means less time building reports from scratch and more time analyzing results. There is also a major benefit in intelligent search. So instead of using filters or guessing document names, users can type plain language queries such as leases with CPI increases in New York or leases expiring next fiscal year. And you can get accurate results instantly. Lastly, some platforms are introducing guided help features that use AI to suggest next steps or offer inline explanations based on your activity. This creates a more intuitive user experience and accelerates onboarding for new team members. These AI capabilities are already available in some modern platforms. They support compliance, reduce manual effort, and elevate the value of your lease data across finance, legal, and operations. So you'll see that I've split these next three slides out into different sections of what we have today, what we expect to see in the next 6 to 12 months, and what we're expecting to see in the next 3 to 5 years. So today, automation is already saving time, but interaction is still pretty manual. We've come a long way, but we're not there yet. So right now, most accountants still spend a significant part of their day clicking through complex lease systems to get answers. In general, a lot of clicks through the system. Lease administrators are opening multiple screens to check expirations, run reports, and prepare disclosures. Even with automation tools available, users often have to guide the software step by step. That's starting to change now with AI, though. AI is now helping to extract contract data from scanned leases, validate information against the original agreements, and even suggest accounting treatments or disclosure formats. These are real-time savers, especially when working across hundreds of contracts. But the experience still depends on navigating interfaces and initiating actions manually. So in the next 6 to 12 months, AI is really going to become your assistant, anticipating and executing tasks. In the near future, the interface won't be the center of your workflow. Instead of navigating through a software menu, you'll be able to ask the system what you need. Picture an accountant opening their lease solution and typing, "Show me all leases expiring in Q4 above 1 million in Region North." Instantly, AI compiles a list, filters by region and value, and presents it in a ready-to-use dashboard. No dropdowns, no filters, no multi-step reports. And this really isn't just hypothetical. Many leading platforms are already integrating generative AI that understands your data, your templates, and your language. These systems will draft journal entries, prepare disclosure footnotes, and recommend classifications based on prior decisions. The accountant's job becomes more focused on validation, analysis, and decision making, not data entry or clicks. This is where we truly begin to see AI is the new UI in action. It removes friction from the user experience and turns software into something that feels more like a conversation than a task. In 3 to 5 years, a world of conversational systems and autonomous action is what we can expect. Looking a few years ahead, AI will not just support users, it will represent them. So each company will likely have its own internal AI assistant. that understands its accounting policies, approval structures, disclosure preferences, and audit history. That AI assistant will be able to interact directly with other systems, including AI bots embedded in lease solutions, ERP platforms, and even vendor portals. If an accountant needs a lease extended or a renewal evaluated, they might simply say, extend Site B by 2 years at current market rate and reflect that in Q3 forecast. The AI assistant will negotiate terms with the vendor's AI, update the lease contract, adjust accounting schedules, and generate audit-ready entries, all while alerting the user for final sign-off. What used to take hours across multiple tools could now be done in minutes with a full and complete audit trail. This vision turns the user from an operator into a strategic reviewer. They aren't there to click and format, but to guide, interpret, and lead. Let's look at predictive forecasting for FP&A in that same context of looking at now, 6 to 12 months, and then 3 to 5 years from now. So right now, FP&A teams spend a significant amount of time manually modeling lease-related scenarios. Most organizations rely on spreadsheets to build out what-if models based on static assumptions, flat rent, fixed increases, or CPI-linked escalations. These payment schedules are exported, adjusted, and then fed manually into multi-year cash flow projections. If someone wants to test a scenario, say CPI increases by 2%, it often means diving back into the spreadsheet, changing assumptions, and checking the downstream impact across formulas and tabs. It's a time-consuming process and heavily dependent on the individual who built the model. Meanwhile, consolidating lease obligations into the broader financial forecast or ERP planning cycle is also manual. Teams often spend hours mapping lease lines to cost centers, making sure that forecasts align with headcount and CapEx assumptions. Dashboards do exist, and they are helpful, but they're typically refreshed nightly at best. So FP&A teams are left reconciling yesterday's data while trying to for tomorrow's decisions. So in 6 to 12 months, this is where we can really start to see a transformation. AI co-pilots will begin to assist FP&A teams by suggesting and executing scenario models dynamically. Instead of manually adjusting assumptions, you'll be able to type in natural language commands like, what if CPI jumps 2% in Q1? Or show me the impact of extending our New York leases by 5 years. AI will run these scenarios, update the projections, and surface the insights without needing to rebuild any of your models from scratch. In the near-term horizon, systems will start to sync automatically. Your lease data, ERP budgets, headcount planning, and real-time sales or CapEx projections will be linked. So changes in one area flow directly into your forecasts. This removes the need for constant remapping or file juggling. You can run sensitivity analyses in seconds. For example, if you want to see the impact of the discount rate of increasing the discount rate by 50 basis points, you can just enter the change and the system instantly shows you the updated calculations, visualizations, and a summary of how it affects your financials. Another key innovation will be micro integrations, AI-powered features that let you link leases directly to budget line items with minimal setup. So this eliminates tedious mapping work that normally happens in spreadsheets or during month end. And as journal entries post, your rolling forecast will update automatically. You'll even get real-time variance explanations where the AI annotates why forecasted lease expenses diverged from actuals, saving hours of digging and reconciliation. Looking even further ahead in 3 to 5 years, Forecasts become living, breathing models. AI won't just run scenarios. You'll have forecasting systems that adjust themselves in real time based on live operational and market signals. Imagine your model adapting dynamically as central bank rates change or as your occupancy data fluctuates by region. The AI monitors for cash flow risk and flags potential for shortfall months in advance by cross-referencing internal and global data. You're not reacting anymore. You're getting out in front of the issues before they materialize. And these actions become self-healing. As actuals roll in, the AI learns, tunes its assumptions, and improves forecast accuracy continuously. So manual rework becomes minimum. Lease changes will flow directly into corporate budgets and even into board-ready slide decks. You'll spend a lot less time formatting and validating, and more time shaping the conversation around strategic decisions. At the executive level, CFO and finance leaders won't need to ask for decks and sift through dashboards. They'll get intelligent, AI-generated summaries that highlight key drivers of change and recommend next steps. So lastly, let's look at global ready functionality. Global operations today add layers of complexity to lease management and accounting that many organizations struggle with. So today's leading lease systems do a pretty solid job at handling this complexity by incorporating daily foreign exchange rate updates for leases in multiple currencies. They support major accounting standards such as ASC 842, IFRS 16, and GASB 87, ensuring compliance no matter where your leases are located. Localization is another key capability. Systems offer user interfaces and document templates in multiple languages and generate country-specific report templates to help teams comply with local disclosure requirements. Tax regulations and incentive programs vary widely across regions, and most systems allow you to configure these by location while maintaining a centralized cross-border lease portfolio view. Audit logs track every user action, providing transparency and data privacy controls critical to in the global environment region based on discount rates that can be assigned to accurately reflect local market conditions. Despite these capabilities, much of this still depends on manual intervention. Teams monitor FX rates, update tax setups, adjust reports for new rules, and verify compliance largely by hand. The near future brings AI into the picture as a powerful enabler for global lease management. Here's where we're really going to start seeing systems automatically applying the company's FX policies by legal entity and removing the need for manual rate updates or corrections. During data entry, AI performs real-time checks for compliance, data consistency, and potential errors, alerting users immediately. When accounting or tax regulations change, AI auto-updates your templates and workflows, reducing risk and effort spent on staying current. One of the more impressive advances is AI-powered translation with legal nuance, meaning that the system understands concepts and terminology to deliver more accurate jurisdiction-specific language in contracts and disclosures. This helps avoid costly transition errors and legal misunderstandings. AI also analyzes tax setups and suggests the best configuration for each region, optimizing incentives and compliance. Workflow adjustments that used to require manual configuration by local teams will be guided and automated by AI, dynamically tailoring processes to each region's unique requirements. Plus, AI continuously monitors your data for anomalies or compliance red flags in real time. So you can act immediately instead of discovering issues during audits. Looking even further ahead in 3 to 5 years, We can expect the emergence of fully integrated AI ecosystems that autonomously manage global lease portfolios from end to end. Imagine bots continuously monitoring global FX markets and executing hedging strategies automatically, protecting your cash flows without manual intervention. These same AI agents will generate audit-ready reports in the local language and formats required by each jurisdiction. AI will also proactively alert you to regulatory changes and configure your systems to remain compliant instantly, adapting new strategies on the fly as new laws are introduced or updated. Multilingual AI assistants will be able to answer region-specific questions from local teams in real time, no matter the language or the time zone. Beyond that, AI will orchestrate work across global teams, routing tasks between legal, tax, accounting, operations, without requiring a central coordinator. With always on AI audit monitoring and real-time adjustments of discount rates and other key inputs, your global lease accounting becomes not just compliant, but truly strategic. This level of automation and intelligence frees finance teams to focus on governance, risk management, and long-term planning, turning data into complexity. Turning complex data is becoming competitive advantage. The rapid evolution in global lease management technology is exactly why finance transformation cannot wait. If you're still relying on manual processes, updating FX rates by hand, juggling multiple spreadsheets, or struggling to keep up with changing regulations, you're already behind. Adopting a modern AI-enabled lease accounting solution today isn't just about efficiency, it's about future-proofing your finance operations. It puts you ahead of the curve, reduces risk, and empowers your team to focus on strategic insights instead of manual data wrangling. The transformation is happening now, and the companies that embrace it will be the ones driving smarter decisions and gaining competitive advantage in a complex global landscape. With that, I will go into the final polling question, which of course is about AI. I'm curious to know how often AI is being used in your day-to-day lives, be it just in regular day-to-day or in your day-to-day work.
Thank you, Sabrina. All right, it's time for our third polling question. Please take a moment to submit your answer. You will have 1 minute to respond. Thank you.
Interesting. So the most popular answer right now is occasionally. I think that checks out with where we are right now. I think there are still some people that are using them daily, and I would say the rest of the votes are pretty mixed. I guess we'll give it a few more seconds for the poll.
We will be closing the poll in 5 seconds. Thank you everyone for your responses.
Great, thank you. All right, so now that I've covered all of the key challenges and innovations in lease accounting, I want to take a minute to introduce Nakisa, which is the company that I work for. Nakisa is a global leader in enterprise business solutions, specializing in lease accounting and finance transformation. With over 20 years of experience, Nakisa delivers flexible, scalable, cloud-native software that really helps organizations streamline workflows and automate complex processes. It also helps them gain a deeper understanding in their lease portfolios. Our lease accounting solution supports compliance with ASC 842 and IFRS 16, centralizes lease data, and provides robust reporting capabilities across industries like retail, telecom, healthcare, manufacturing, and more. As part of the Nakisa team, I'm proud to be involved in helping clients modernize their lease management and accounting, enabling them to save time, reduce risk, and focus on strategic decision making. So let's dive into that a little bit more. Nakisa offers a comprehensive integrated workplace management system, or as we call it, IWMS, which is designed to support organizations in managing their real estate and workplace operations efficiently. So as you can see, we have these four suites: Nakisa Capital Projects, Nakisa Real Estate Portfolio, Nakisa Lease Accounting, and Facilities. So Capital Project Solutions covers key areas including project planning and budgeting, site selection, managing repairs and maintenance. The real estate portfolio manages all of your real estate assets, be them owned, subleased, or leased, and helping you track those lease terms and optimize portfolio utilization. Lease accounting, I already discussed a little bit earlier, but centralizes that lease data, automates those journal entries, calculations, streamlines disclosure reporting to ensure compliance and reduce manual workload. And we also have facilities management, which focuses on managing day-to-day building operations and tracking those. So together, these solutions really enable organizations to manage capital projects, real estate portfolios, lease accounting, and facility operations from a single integrated platform, which improves collaboration and operational efficiency across teams. A little bit more on how Nakisa helps these global leaders. So with processes, we are really focusing on simplifying, standardizing, and automating business processes. We're really focused on people, so cross-team collaboration, as I've already discussed. Technology is super important, as well as the data. And some items that really set Nakisa apart are the integrated end-to-end solution, multi-level approval systems, native bidirectional ERP integration with robust APIs, and many more things. Since I spoke so much about innovation, I did want to touch a little bit on Nakisa's innovation roadmap, being that right now we are already using that lease abstraction with AI, financial scenario analysis for site selection, mobile support for repairs and maintenance. Some interesting things that we have coming are additional products such as capital planning and budgeting. We are also launching the Nakisa Data Hub product to offer cross-product analytics leveraging Gen AI. And later on, we really plan to expand our IWMS offerings through strategic software partnerships and integration to Nakisa Workforce Planning product portfolio, as well as launching our co-pilot within the Nakisa Product Center. So if anyone has any questions or you want to know more about Nakisa, feel free to ask me, or you can always send me an email, which I believe is linked in the slides and you should receive. Thank you.